morning. We are Mortgage Pros 411. I am Audrey Boysono, and I'm joined by my co-host, Kevin Casey. Today, Chuck Iverson is with us. Why Chuck Iverson? Well, let's just say there are a number of reasons, and let's just take a dive into that before we get to our announcements, because I've known of Chuck for many, many years. And then he was in Housing Wire magazine as an affordable housing expert. So, no pressure, Chuck. With that being said, around the same time, I had an AE tell me that they had sat in on one of his calls internally in their company and that he's just an amazing guy. So she introduces us, he sends an email. I mean, I thought that the skies had parted, the angels started singing, and I read it to Kevin because I'm like, can you believe this guy? Like the nicest man ever. So in addition to being an expert on affordable housing, but also a veteran of the industry for, we won't even make you say how many years, he is just really a wonderful human. So welcome, Chuck. It's really nice to have you today.
Well, thanks for that kind intro. I appreciate it very much. And
I don't normally do that, just to be clear. So,
well,
oh my God. Anyway,
thank you. Well, that means
it.
even more than I do appreciate it, and happy to be on the show, and we can talk all things mortgage and wander however you would like, Audrey.
Well, I did warn him we do wander. So happy Fed week, everyone. So the Fed is meeting today and tomorrow, and they will make their little announcement tomorrow afternoon at 2 p.m. Eastern time and let us know what they're going to do. So what they're going to do is a little less important than what they say about what they're going to do next.
Always.
Would you agree, Chuck?
Yeah, I would. There's obviously the market is pricing and expecting a pause, which means, okay, now what? And so that's why the words that they articulate are going to be so important.
And is it a pause or a skip?
Matter. Yeah, in addition to that, we have a 20-year bond auction today, but that's, secondary for sure to what's happening tomorrow. So let's just take a look back at last week, Kevin. We had Megan Anderson with MBS Highway on, and she walked us through how to use AI in your business. And it wasn't just like, it wasn't some cursory thing. I mean, normally I tell people, log into our YouTube channel and speed it up to, to get through it and listen to what happened on the show. For this one, I'm telling you, you're going to want to slow it down, take some notes, because she really gave us a rundown of how do you use AI in your business. So it wasn't up this morning when I looked, but it will be shortly on our YouTube channel, Mortgage Pros 411. So take a gander at that. And then I use
AI quite often.
Yeah. You know what? How do we even know you are a person right now? I mean, you could just be an AI generated,
because
whatever you call
it. The dumb things that I'm going to say, no AI would say. So that's how you know.
Oh, I don't know.
You can't fake that.
Listen, I drive around San Francisco and I run around those AI cars that are driving around with no drivers, and I've almost had an accident with them.
Waymo.
Yeah. Me too. Although I'm not sure it was their fault or Kevin's fault when he almost gets in an accident. Anyway, we're going to be teaching a live NMLS class this Friday in Thousand Oaks. That would be, September 22nd. So the Greater Ventura Camp chapter is putting that on, and it'll be fun. We always have fun teaching down there and doing those live classes. Pardon me?
That's a fun chapter.
It is fun, but you don't have to be part of the chapter. You can just go to the class. So go to the class, see us. We'd love to see you. And with that, we're going to take a little dive into what's going on out there. So one of the things I liked in that Housing Wire article, Chuck, they had a panel of affordable housing experts, some of whom I suspect have never done a loan in their life. And they had posed the question, here's this big problem. And you said the question certainly is, what can we do? Not what are the challenges? And what that tells me about you is you're really a solution guy, not a, hey, let's dwell on the problem kind of guy. So let's talk about affordability, which we all know is an issue. And we have a bunch of people who think that if they just wait till the rates come down, everything will be better. But we know that's not true. So what are you telling people these days about affordability and how to deal with it?
Yeah. So, I mean, there's just so many aspects to, I guess, this concept, and you grilled me on it pretty good when we first met, because you could take it from any level. on the macro level, there's just two big factors, right? There's the price of houses and there's interest rates. And so just kind of start there. I would just in prep for this, I looked up, and I think that the median price of a house at the beginning of 2020 was about 270,000 nationally. And at the current where it sits, it was 399. And so,
Wow.
yeah. And so what
Although
happened?
we will point out that median price is a lot different than, you know,
There's an
appreciation,
inflation
et cetera.
adjustment, but they just use it as a proxy. Okay.
Yep. All
So
right.
the point is that this extremely low interest rate, all the liquidity that got pumped into the market, inflated an asset, and that asset is housing. So on top of the fact that there was already challenges around inventory and demographic challenges and stuff, that happened. So that happened now. So you think, okay, well, we'll raise rates and prices will come down. But there's in economics, there's secondary behaviors that can happen. And so we've locked in a lot of folks in lower interest rates. And that's why, seconds and renovation and other things are going to happen, So that's just something that we can't do anything about, right? There's nationally and societally, I guess would be a more accurate way of saying it. There's a lot of well-intended efforts to try to provide access to wealth and to this American lifestyle to as many folks as possible, from all walks and backgrounds of life. So if you're a loan officer or a smaller mortgage banker like Mason-Mac is, we don't create new programs, and we don't control home prices or inventory or any of those things. So what can we do is be creative and figure out every tool that's available that you can offer your customers. And therefore, and maybe we'll get a little later, we can talk about strategy, try to leverage that for better to strengthen your referral partners, and maybe to get into affinity relationships and to get out in your community and educate. And so that you're basically farming, you're increasing your referral sources, as well as hopefully getting some immediate deals. And deals, it's a challenging market without a doubt, right? So for us, with what we're doing is basically trying to take advantage of all the programs that are out there. It's pretty simple, but also do it in a way that, like, I'm pushing the LOs. Okay, so let's just say that we have this, Chase, for example, has got 30 billion committed to affordable lending, whatever that means, right? And for them, it's in certain, because they're a bank and they've got multiple regulators, they need to get into certain neighborhoods, majority, minority census tract neighborhoods. So they offer pretty big pay-ups that we're passing directly through to our loan officers. So, and that's available to other people. It's not an advertisement, but just one example. So, the easy thing there is you check to see if my current buyer qualifies, right? But that's, no. Go out and find listings in those areas. Go talk to the agents, start farming your database, maybe even market listings for agents to your database that qualify for these programs. You got to be proactive. And that's what we're trying to do, is invigorate our sales force, because it is challenging. And I'm kind of getting wound up here. So I do have a pet peeve in the industry right now, because there's kind of two camps out there that I see when it comes to the industry. There's just the people that just talk about how hard it is, and we don't really want to be in that camp. Then there's the other people who probably offend somebody, I don't know who, but this isn't your mama's mortgage company anymore, and let's effing go. And this whole idea, like, you can just kind of rah your way into the fact that there's no inventory, and you can manufacture deals. So you have to, I do acknowledge that this is it's a mortgage depression of some sort. It's a challenge. And yet, we have to persevere, and we choose to persevere. And in doing so, then you have to make sure that you are investing in yourself, you're investing in your mindset and your toolkits to go out and survive this market, but also intentionally create a better market for 25, 26, 27, which I think are going to be really good years.
That makes sense. Yeah.
We're hearing that too, where, I mean, if we just have to get over this hump, and we had, who was that, Kevin? We had somebody recently who's there, you know, I'm like, think of something good to say. And he goes, well, today's almost over. And then we have one less day in this market. And I'm like, oh my God.
Yeah,
That's
that's the other thing that it's happening. And I think I catch myself doing this, and the whole industry got this head fake because there was a forecast for lower rates this fall, right now. And as far as I can tell, the 10 years headed for about 4.38.
well,
but
we're at 4.35, so we're almost there, people.
So the idea that there's going to be a flip that switches, the switch that flips is, that's not how this is going to happen, unless there, as we know, we thrive on chaos, some ultimate calamity, which I hope doesn't happen, that would cause something along those lines. So this is going to be more of a slow thaw. You've got to get inventory onto the marketplace. You've got to get hopefully maybe a little bit more affordable rates, and pent up time and demand where people still dream about a bigger house, or they are forced into another house, or they want to get into a school district, or all the other life circumstances that cause this. And then we get through it. But it's not just like, I got to survive one day because next week's going to be there. And I think this is what you were talking about, because I think you see people that are paralyzed too, and you can't do that. You can't be in the like hoping and praying. And I just got off a coaching call, and my coach said, hope deferred makes the heart grow sick. I'm like, oh my God, that's dark.
Wait, say that again. Hope deferred makes the heart what?
Makes the heart grow sick, but a longing fulfilled is the fruit of life. I'm like, whoa, that first off, that's deep. But I think the point is that, if it's only a hope and, it keeps getting moved out into the future, then it becomes demotivated, uninspiring, and you feel like giving up. Right. And so you resign and you don't do that. And, facing adversity is hard. And, this is a weird kind of adversity for salespeople, right?
Oh yeah.
We have a long sales cycle with referral sources. We've got, how do you know if you're making traction? How do you know you're taking these right things? And it's real easy just to kind of get lost in a sea of almost despair to a degree. And even if it's not at the conscious level, it's probably under the surface there. And so, you have to, there is a switch you can flip, and that's inside your head.
Mm-hmm.
You have to turn that to on, and you have to then say, okay, if it's gonna, kind of what I'm going to do something, I'm going to take action. And there's, you and I talked about the amazing resources that are available for free or for small investments right now. You can do group coaching for $300 for 12 weeks of, how to talk realtor.
Yeah.
Oh yeah, Katie. We know that one.
Katie Delasta, we love her.
Yeah, and and lots of great stuff in there. But mostly, you're talking about how LOs, are at home maybe now. They don't have a group around them. You got to get that group environment and some accountability going. So that's one level of energy. You got, the best originators in the country with tips on YouTube. And so there's areas where you create,
and there's guys that are killing it still in this market.
Yeah, absolutely.
They are making
and so you have to figure, if they can do it, I can do something. You have to reinvent, and then you set your actions and then focus on what you can control, and play the long game.
Well, the other thing, we have to not allow the media and people who are less informed control the narrative, which is, oh, it's not affordable. You can't buy a house. You're better off if you wait till the rates come down. All that is a bunch of nonsense. We
Yeah,
know it or should
we
know
know
it.
it.
If we don't know it, then you need to plug in and learn something, because we should know that we don't know when the rates are coming down, if they're coming down, or what they're going to come down to. They probably will come down, but to what level? And really, is it going to make that much of a difference? In addition to that, we have wage growth. And so wage growth is offsetting some of this inflation and some of the affordability problems, but nobody talks about that.
Right.
They don't want to talk about that because that doesn't
Yeah.
sell newspapers
No,
or whatever.
bad news sells, and that's just the thing. And there are, there's a lot of resources out there. MBS Highway is one of them, where
Tons.
there's lots of resources about why now.
Mhm.
And I think it's, for old people like me, I kind of look like it's kind of back to where it was in the 90s, right? Or when I started, and you're at the same time, things are different. It might not be as easy to get referral sources, or you're going to have to change your tactics to how to do it. But we have to farm communities. We got to have first-time home buyer classes in education. I think we have to work verticals with corporate nonprofit customers and really look for
Please
opportunities.
hold.
in that.
What on earth does that work? Verticals? What is that?
Well, so we put together, and I know many companies have this, an affinity lending program where basically the company and the LO create corporate customers, and we offer discounts, and it's coming from both
Gotcha,
the LO and
okay.
there. And then, so like, for example, we signed up the city of Chico. Our great branch manager up in Chico did that. So, and again, I want proactivity. It's not enough just to sign that up and then maybe they put out like, oh, you can get a discount on your mortgage. We should be doing lunch and learns, educating people that want to buy houses a year and 2 years down the road, preparing them and being of service.
Yeah.
And we talked about,
there's an idea, Chuck. Be of service. I love that. We talk about that. It's a big deal.
Well, it also has the counter effect to that word I said, despair, which might be maybe an overstatement, but maybe not. But when you're taking positive action, when you're serving others, you don't think about that.
Right.
Yeah, and it motivates you. And if you can,
It does.
I'm a big fan of the concept of an upward spiral. And upward spirals are just the opposite of downward. So downward spiral, something bad happens, and then you're down, and then you're kind of looking in that down, and all of a sudden more bad there. So, if you're taking positive action, you're grateful for the opportunities you have, you're of service, and you're opportunity minded, I believe you can create an upward spiral. I don't think you can manufacture listings, but I do think that you can make it, and you have to believe that.
Yeah,
but I'm going to keep driving this home because I think we forget. It used to be there was an entire segment of the population who couldn't get a loan. We get a set of tax returns, and if you weren't showing a positive on your investment properties and or your business, your small business or large business, you were done. You couldn't do anything. And now we have a plethora of options for self-employed people, for investors, for people who have no income. It's incredible. And this is not irresponsible lending. This is lending to people who do have means, but it gives them opportunities. I wish there were more people, more opportunities on the owner-occupied side, but at least at this point, you can get a loan for people that we used to not even be able to do loans for. So again, okay, we're not going to do a rate and term refinance that we just have to, sneeze lightly twice and then we get paid. Those are done. But we can do other loans that, I don't know, may require a little work, but that's good because that's what we're here for. Otherwise, the button does replace us. And so I think that if we really work on getting our head on straight, which you clearly spend some time on, Chuck, and so do I. Kevin just is always happy. So it's all fine. Don't worry about anything. So it is really important that we don't accept what is being fed to us by, all these other sources that want to it's this doomsday thing, which is nonsense.
Yeah. I feel, there's this balance of acknowledging the challenges. And I also kind of and I said it earlier, the word hard, which I don't, ever since I heard listen to Jim Rohn, I've, which is his whole thing was, this is America. It's easy. Go to Bangladesh if you want hard, right?
Really hard, yeah.
Or fill in the
You're not gonna
country,
be
right?
alive tomorrow.
It's a challenge. It's a true challenge in this industry. And frankly, there might be some people who don't have the resources, they don't either have the financial staying power to go through there. And that's okay too. There's, it's a great economy now on the flip side of things,
Yeah,
right?
it is.
It's just, we were the 2% in 2020, and now we're kind of on the flip side of that,
Right.
But this too shall pass.
There's something you just said about the Bangladesh thing, and not to pick on Bangladesh, but I know a lot of people who've immigrated to the United States, and when I ask them, why is it you came, and they describe life where you were, one of the things that comes across is that, outside the United States, you cannot predict how you're even going to survive tomorrow. You are in survival mode every day. In the United States, you can stop, you can take a plan of action, create your plan of action, execute your plan of action, and pull it off over time, whether that's going to school and learning something, or taking a coaching program, learning how to do more transactions. Like I said, there's guys out there that are doing just cash out phone calls all day long, and they are killing it right now.
Yeah, I saw and I won't be able to give this person credit, but it was a recruiter on LinkedIn, and he had tracked his activities, and he said it was so humbling because, of course we're busy, right? We're at our computer all day, and we're responding to whatever emails, and we're consuming information and all this stuff. But he wrote down his true business generating activities, and it was an eye-opening experience. So I think we all can turn up the dial a bit on the actual stuff, and it's very uncomfortable. It's uncomfortable to make phone calls. We could be canvassing, who is it? I was just talking to this other guy. His son got into real estate, and he's the number one agent in his real estate office, and he started door knocking day one.
Wow.
I'm like, that's awesome.
That's
amazing. Meeting people. Hey.
So it's making the phone calls. I mean, we've talked about this before, and I've fallen out of the habit, but when I had a coach, I used to, I had to make 10 phone calls a day. That was the deal. Right. And we were talking with I think it was Katie the other day about it. And it was like, the first 2 or 3 are hard. After the 5th one, you're just in that mode. Just call. And when you're committed to somebody to make those phone calls, you get them done. It's like, wait, stop. I can fit in one more here. I can fit one more in here. I can fit one in, and you get them done, and you realize how important they are.
Yeah, and I try to encourage this at my current company, but former companies. I just want to create a strong network between all the salespeople in our organization. Go, whether it's in your branch to branch manager, you meet somebody else at an event, you reach out to somebody who's doing well, and create these accountability groups. It's easy to do, and I've had salespeople who've had shoe funds and charity funds for, where you have to put into the kitty if you don't do what you say you're going to do, and make it fun and gamify it too, because that's the other piece of kind of the despair, the heaviness of this can drown you down as well too. So if you make it more fun, and Kevin, you said something important there, because it's so easy to gear up. Okay, I'm going to make some calls today, and we'll take the strategy piece out, but I'm just going to make calls today. And you gear up and you make a couple, and you're like, phew. Where if you get over that hump to where it actually becomes easy, it's in those next 18 there that
the difference between making 5 phone calls and 20 phone calls is easy. It's the first 5 are the hard ones.
Yeah. So get over that. Get to number 6.
Yeah.
But to your point, Chuck, tracking is important. And we had Goran with Cimarron Software on a few months ago, or a year ago, or 20 years ago. I forget when, but anyway, not too long ago. He's on YouTube somewhere. It was a great session because he has this CRM and they track everything. And if you're not tracking, so if you make 5 phone calls today, that's great. But if you don't know when the next time you're going to call that person is, then you're done. So unless you have a system that you're using where you are doing the phone calls now, but you also know when the next one is. So you schedule the next one into your system. And I asked somebody who coaches a lot of people a few days ago, this was actually a few days ago, not 20 years ago. How do you do that when you're traveling or something comes up? And so you have this, you have certain things that you should be doing. She goes, have a little grace for yourself, a little grace, not a lot, but some. So you're not beating yourself up. So you didn't fail, you didn't cheat, you didn't do something bad. You're just going to make it up on this day instead. And so if you, and as LOs, I know I struggled with this for so long. I mean, how could I possibly schedule something in when who knows what's going to come up that I'm going to have to deal with in that second? Because I am so important that only I can fix these things, and it's going to happen that there's going to be a problem that I have to solve. Okay. So now we know that's not true. And so we have to plan accordingly. So again, scheduling, tracking, all that disciplined stuff that a lot of us sort of thought was, for everybody else for all those years, it's not. It's really the way forward. And so the successful teams, the call centers, they're doing it. People who are doing it, right, making, closing loans right now, they're doing it. So some of us have had to train ourselves to do it a lot later than, the person who starts door knocking on day one, right?
This is truly, they talk about having a beginner's mindset, because my guess is most of the listeners out here are not beginners. In some cases, I think we'd all be better off if we were, right?
Exactly.
And they say that because it wasn't easy when all of us started, but we didn't know that. We just did it, right? And so you have to get out. I do think that, I have a friend, Maria Nemeth, if anyone wants to look her up, runs a coaching academy, and amazing thought leader. But she uses this metaphor of a rocket ship launching, and maybe you guys have heard this before. It takes so much fuel to break through in gravity to get into space, and if you don't put enough fuel, and in our world, fuel could be the right strategy, the right consistency, and the right effort, then you never break gravity. And so, it is important to take action and to make calls, but you also have to sustain it with the right strategy and the right persistence and the right consistency and, value. I mean, calling in an agent and saying, hi, I'm a loan officer, I need a deal.
Doesn't do it.
Yeah,
but back to your,
although you could probably, if you have some charisma and some experience, you could probably convert some deals that way. But I'm a big fan of leverage, and so okay, hey, we've got these new programs, going to people that I think that if I was to look at a database of past realtor contacts, going deep into that, trying to resurrect some people that don't have business, talk about co-marketing, talk about, can we farm your past customer database if they have one, hopefully they do. Can we do some way of being a partner and leveraging, some of the things out there. And every single mortgage company now, we're all well-resourced. And if you're a broker, you've got, now multiple companies out there, and you've got your own kind of resources that you can draw from. So, there's plenty of things out there to offer, but you do have to be strategic around it. And again, get a group, get a mastermind group, get an accountability group,
Yep.
Listen
well,
to
you
this,
and made the
this
comment.
Amazing podcast.
Yeah, no, there's lots of tricks you can do on the groups.
Kevin, you completely talked over him when he was saying that they should be listening to this amazing podcast. Come on, we need to focus for a minute. Okay, now finish your thought.
I was going to add on to it. It's like there's a couple things there. First of all, the rocket ship. When you fire a rocket ship to the moon, it's constant, never-ending tweaks and adjustments as to destination. Because otherwise, if you just shoot it to the moon, you're going to miss. You have to constantly readjust your strategy, and that's where having a group of accountability people really come in. And I've done that with, other loan officers, and we've like, what's our commitment to each other? And then we would just like, I had one where we literally committed to give each other $2,500 if we failed to live up to our commitment. And I remember it was a big, like, and that was 15 years ago. $2,500 is a lot of money. And
are you kidding? In 2023, it's worth more than it was then in a mortgage person's life, right?
Yeah. One time I was going on a trip, and I realized I hadn't completed, because of the trip. I got so distracted. I had to do one more thing. And I woke up at 6 o'clock in Europe, and I realized, wait a minute, it's still not midnight back home. I can get that done now. And I got it done. So I didn't have to pay $2,500.
Oh, well, so we figured out that Kevin's a cheapskate. And no, I'm just kidding.
Yeah.
I think that, to your point though, the adjusting where you're going, the trajectory. I mean, I've been saying this to my kids for like the last few years as they are going into college, et cetera, et cetera. I'm like, if you adjust your trajectory like 1%, 2%, even tiny little bits, sometimes you completely change where you land. And so that is a big deal. And it's something that, you don't even have to make a monumental change. Sometimes you can just make a little change, or you try an idea and maybe it doesn't work, but what if you just change 2 little things and then it does? So be open and flexible, right? Chuck, what were you going to say?
Just the last thing on this kind of sales and strategy side of things, I would say is like, I think it's a good time to have a vision of improving your business. And I think a lot of times we're just thinking that means more deals, right? But, whether it's, an individual originator, a branch that's made up of those originators, or a company of originators, we kind of all have the same underlying building blocks of our business. And those, so if I'm an originator, I'd be thinking of it this way. It's like, okay, I've got 5 realtors, all of them, their business is down now. I've got, these 20 I've done business with. I'm going to set up, I want to add or top grade those 20, and I want to get some more, so that when I come out, I'm going to have a better inventory of that pillar of my business. I'm going to add 5 corporate nonprofit, customers this year. So I've got that pillar, and I'm going to farm them. I'm going to work my database, and I'm going to implement, quarterly sales strategies. Maybe it's so if I've been doing this for a long time, I've got a lot of people now that have equity. They've got kids that are in home buying age. Maybe we start talking about how to transfer wealth by helping your adult children buy homes. Maybe I'm doing first time educational meetings with my database, and I'm getting that out there. So the idea is that you are basically playing a game that, while everybody else is kind of reeling and in despair, you're trying to build a stronger platform for your business. So when it recovers, you're really at the next level. And that's what we're trying to do as a company by, again, the market's changed now, and people are now it's kind of more real. It's not like all the hedge fund money and the big signing bonuses and that whole thing. It's more like, do I like the people? Do I trust them? Do they have the services? Is there a vision? Can I see myself being in this community? And that's where we play strong. So we're able to increase the number of salespeople. Their businesses are down. In some cases, we're having to carry people, but ultimately we're going to be a stronger company for that. And a broker could take the same mindset, and maybe you can attract 3 to 4 like-minded LOs into your organization right now to kind of help defer the expenses and have that more of a community. So whatever your business model is right now, have that vision of creating a better business for 2 and 3 years down the road.
Well, so first of all, we have a comment from Jill. She says she likes the idea that Chuck Iverson, CEO of Mason-McDuffie, attended a coaching session today. I mean, everybody needs to keep improving themselves, right? But we love it that you are willing to admit it. You had made 2 comments to me. First of all, you said we're playing the long game now, which is what you were just talking about. But you had also mentioned building a multi-pillar business with different sources of business, which you were just talking about with some of the nonprofits and the cities, but also different segments, not just realtors, different business groups, perhaps, etc. So we have so many options right now. It's incredible if we just take the time and put the effort into building our businesses and engaging with people and not just waiting for the rates to come down.
Yeah, and there's product opportunities, and we can, if you want to stay on this topic, we can, but if we want to shift to, obviously right now, you can at least be offering seconds and HELOCs to your past customers. They can get possibly better deals, at their financial institutions, but you're just talking to them. It gives you something to talk to them about, and you can do some deals, and you can get some there. Reverses and some of the creative reverse products that are coming out are really interesting. And we're here in the Bay Area. There's probably a huge marketplace.
Yeah, a lot of people don't know that you can do a reverse under 62 in the on a jumbo.
Yeah, and there's I just kind of lost this one product that I had in mind, but there's a lot of different opportunities that are out there. We just have to kind of get that strategy and leverage the database that you have and figure out ways just to stay engaged with it. And it's this is the metaphysical part of my presentation, so be prepared. But I have just found, like, when I put out effort, sometimes I've never not been rewarded, but sometimes it doesn't come from that directly from that effort. It comes another way, but I always feel like the reward comes for the effort that's put out.
We'll take it right now. You also made the comment, you quoted the Navy SEALs and said the only easy day was yesterday. I thought that was, we can certainly appreciate that right now, right?
Yeah, I read this, so highly recommend this book, The Wisdom of the Bullfrog. And so the bullfrog, and I'm like, what is that? But it's Admiral McRaven, who's given one of the top YouTube, it wasn't a TED, it was a YouTube out there about, it was a University of Texas address about making your bed. But the bullfrog is the leader of special ops for all Navy SEALs and Rangers and everyone. And he held that position. And he wrote this book, and it's a mindset book, because basically every chapter is one concept taken primarily from some part of the military, and not just the Navy SEALs, because he likes to quote it all. But that one really, given the current environment and everything that comes across my desk, really resonated, because it's not to be negative. It's to be real, that we don't know what's coming today. And if you're just like expecting it to be easier than yesterday, you're going to be sorely disappointed some days. Disappointed and unprepared.
Many days.
And so
Many
the only easy day was yesterday. And in that story, they talk about a guy who made it all the way through Navy SEAL Hell Week, all the way through 3 weeks to graduation. And he quit because he got through Hell Week and it still sucked and was hard. And he was just like so let down. And that was the whole story. And I can't imagine what, nothing against this person. They just decided it was not for me. And obviously a complete stud, because they made it through.
You make it in training. You just make it. They're a stud.
Yeah. But and so that's kind of, I just feel like it's a good mindset kind of thing, like for us, and we have to be careful not to gear up so much like we're ready for battle per se, but we are ready to take on the day, to be strategic. And I think this is the other piece of this, is we're talking about all the should activities, and we got to be careful about that word, right? But the intentional activities we want to take, and you have to know that there's this other sea of unknown. You don't know what's going to hit you, but there's about 100 emails coming your way of other stuff, right? And so I think that's just it's a little bit of solace for me, and hopefully that helps other people.
Well, speaking of things coming your way, if you are a loan officer who signed up with a company and took a signing bonus, or some advance, any kind of money, I hope you read your contract. So just a little reminder, there's a lawsuit happening right now where originators are being sued over the advanced compensation they received. And so for God's sake, people, read your contract before you sign it. but also read your contract before you leave a company, because sometimes,
Uh-huh.
oftentimes, there are time limits involved and a certain obligation that you have agreed to. And these companies are feeling the pinch right now too, and they're suing people. So the last thing any of us need right now is that kind of nonsense. Oh my God, if I say nonsense one more time today, this is not a typical word for me, Chuck. I feel like I've said it 37 times today. I don't know why. So bottom line is read your contracts, read your contracts, read your contracts. Make sure you know what you're agreeing to and see if it's really worth it.
Yeah. Be intentional.
Be intentional. All right. Little Calhappa reminder. So we keep talking about this because there's so many little stories swirling around about Calhappa. So I called our good friend Molly Ellis yesterday just to make sure I was up to speed. Didn't, nothing else had transpired. And she said, so we'd been talking about how they're going to roll out some idea of what was going to happen in the fall. She didn't say that we're going to have guidelines in the fall, by the way, for this Dream for All program that may come back. It sounds like it should. She said that they are hoping to have a timeline put together by the fall. And I say, fall is sometime between now and Christmas. Okay. So for goodness sake, do not advertise to your borrowers that you have Dream for All, that it's here, that you have no idea what the guidelines are even going to be. And just to recap, she was saying it could very well end up being a lottery when it does come back. So your clients' possibilities of getting this money are not very high. The suggestion is we have programs right now. We have a lot of down payment assistance programs that are available. If that is the reason that your borrower is not able to buy a house, take a dive into that. Make sure you're up to date with everything that is happening with down payment assistance.
Look
Chuck,
at the Home One
you're the
program.
affordability guy. What, Kevin? Sorry, Kevin.
Yeah.
What?
Look at the Home One program from Freddie Mac. It's pretty amazing.
Okay. So, and so somebody said people don't care. They just want the attention, the social media promotion, and we'll keep seeing it. I think that you could be the guy that gets out there, or person or whatever, who gets out there and says, hey, there's a lot of misinformation out there about this program. Here's the real deal. Be the truth in this conversation so that we have borrowers who have proper expectations.
Yeah, I'm going to go off what Chuck was saying about, being proactive and looking for targeting to fit your thing. Because I ran into, it's closed a condo just recently, and the new guidelines for Freddie and Fannie, and they just, more of them came out this Monday or yesterday, and they're just brutal. I mean, it's like, oh my God. So we had, got on a contract, and then we send the HOA a condition sheet of items for what they got reviewed. There was 19 open items to be cleared before the close of escrow by the HOA, not the borrower's conditions. These are all the HOA's conditions. And it was just a crazy nightmare of trying to get it done. And it was funny. My initial reaction was like, oh my God, avoid condos. But reality is target condos, because if you're the expert in them, then you can guide the people and the realtors who do not know about these new guidelines. If there's any dry rot found in a condo now, it's just like a nightmare of trying to solve that. And that's one of the ones I had to deal with. So just, be proactive. I'm reaching out to agents and asking, hey, do you have a condo listing? Do you know about the new guidelines from Freddie Fannie and how that's going to affect?
So Kevin, what had your listing agent done on this ahead of time?
Pardon?
What had your listing agent done on this deal ahead of time?
None of the agents have done anything on it. They don't know anything about it.
Wait, hang on. What was the suggested medication that he be prescribed during this transaction? Because he was so stressed out when the HOA wasn't performing and the deal was going long.
Just so for the record, I had an listing agent, it was calling 3 times a day for updates. From the very beginning, when I was just telling him everything is going fine, we've ordered the appraisal, and he's still wanting more updates. And finally, it was a listing agent said, the buyer's agent, or the buyer's broker actually, when I said, he goes, I think this guy needs some Xanax.
I know Kevin had to learn what that word meant, Xanax. But bottom line is, this is a great talking point for you and realtors, all of them, because whether they're a buyer's agent or a listing agent, they need to have this information. HOAs and the requirements from the GSEs have changed dramatically. And they're not fluffing around with this at all, because it's a health and safety hazard, as evidenced by the collapsed condo in Florida. that we are dealing with the the after effects from. So have this be something you call real estate offices and say, hey, I would love a chance to get in front of your agents and talk about X, Y, and Z. Put together some sort of presentation. They would appreciate it.
I think there was the comment made about people don't care, they want the attention, and in reference to the dream program and these, and there's one thing that frosts me, and that's the loan officer institution is an amazing group of people, and such amazing skill sets where we have to be subject matter experts and salespeople and business owners and leaders and all the time. But to me, underlying it all is this commitment to truth and knowledge, and that you're a trusted resource and a value, and you help navigate people, both realtors and consumers, through these transactions. So it just frankly pisses me off when I hear people that are lackadaisical with the truth.
Yeah, it happens all the time.
Yeah.
And we have a comment here from Sherry who's saying, can someone please get the HOAs to be regulated by an agency? And we've pointed this out because we had the DRE commissioner on, I guess when he had just taken office, and I was on a rampage about HOAs at that time, and I think it was probably 2 years ago.
But they're not regulated.
They're not regulated. They're literally not regulated. It's ridiculous.
And they're the number one complaint the DRE gets, HOAs.
It is, and you have these
not regulating them.
The people who want to be on an HOA board are not necessarily people who are equipped to deal with things like financials, property issues. They don't know what they're doing. So it literally comes down to who follows who's got the biggest mouth, and who has their agenda that some other weakling is going to follow. I mean, we see this on boards all the time, don't we, Kevin? So it is definitely an issue out there, and it would be great if there was some sort of, as a matter of fact, I was having a little chat with our friend at the CFPB this morning, who we're going to have join us, by the way. I may mention this now, on October 10th. Remember, we cannot post that on YouTube. You have to
watch live.
October 10th. It's always interesting. But I was telling them, because they were so proud of the fact that they had shut down this company and they were doing all this bad stuff. And I said, hey, good news for you, because all those people are now employed other places. Did you know that? And he's like, no. And I said, yeah, I keep pushing for like an NMLS like system for people who are in management and who own companies and AEs. So if you have been doing bad stuff, then it follows you just like it would follow an LO. So anyway, so far no takers on that brilliant idea, but I'm going to keep at it. So we'll see what happens. Hey Chuck, we had a question from a listener who is always obsessed with ARMs, and he's wondering if you think that we will see more ARMs come back into the market.
Not for a while. I mean, right now the 2-year is almost a full interest rate or full percentage point higher than the 10-year, and that's so crazy. Inverted your yield curve. And so, there's a lot of stuff that has to happen for that to get back into line. And, it's a little maddening, I think, for those of us that don't work for depositories, that you still see some pretty attractive ARM pricing out there. It's not available on correspondent or on wholesale. It's pretty much limited to retail. And you wonder about that. I did get some insight, and it was pretty fascinating, from one of the largest MSR traders I was meeting with down at Western Secondary. And they actually will work with depositories, where depositories will create a shelf essentially where they'll originate, call this like 100 million of that product. And then they create a LLC, and then they can bring in institutional investors like insurance companies into that LLC, take it off their balance sheet, still service it, and they get some revenue off that, but then the institutional investor can get 5% or whatever the rate is on the whole thing. So it helped me understand a little bit about how the depositories are still doing that in some cases. And I'm not saying everybody does that, but I found that to be kind of fascinating, although it doesn't do me any good. But it's maddening. And if you're in high cost California markets, you know, it seems to really have exacerbated the issue, because even high balance loans, I think, are being cannibalized into the depositories right now. So, you know, it makes it harder to compete for sure. So it's frustrating, but I don't see anything changing on that for, you know, until fixed rates come back and people
Right.
really don't want
Yeah,
them.
until the
Yeah.
yield curve cooperates, how can they, right?
Yeah, no,
So-
I know a San Francisco loan officer, and he's pivoted, and he's just doing loans outside of San Francisco where the only conforming limits can work, because he goes, I'm not competitive in the jumbo market, so why focus on that? I'll just focus on this area here where they're primarily a conforming limit county.
Yeah.
Okay, it's because who can get enough of affordability? I just want to go back to part of our conversation that we had, Chuck, and we've talked about this a number of times, that there is now a scorecard that's being used by the GSEs on affordable lending. And I believe, just because it's so fascinating to me that these are the names, it's LIP and VLIP, correct?
Don't give me any VLIP. Yes.
Exactly.
Yeah, low income.
Okay, so just to
Low
Yeah,
income
go
and
ahead.
very low income.
Right. Okay. Because just in case low income isn't enough, we have to have very low income. So it is, here's my understanding. You tell me whether it's right. 26% of the fundings are supposed to be in low income, right? Is that right?
Very close. I know I gave you that
Okay,
number.
tell me.
But yeah, I think it's 26.
Okay. 26. Okay. How possible is that for the average lender?
I don't know. I think it's a challenge for every lender. I thought, because again, of our footprint, when I first sat down with Freddie Mac and they told me this, I thought, man, our scorecard's gonna suck. And at that time, it was actually good. I'm like, are you kidding me? How? In the Bay Area, you know, we're, you know, and my joke to Audrey yesterday was, we could meet those guidelines in the Bay Area as long as the agencies will accept 80% DTIs, because if you look at the home price and the income limits, that's about what it would take to get somebody into a house.
Right.
But it's not really realistic. And I did ask, I said, oh, you know, did you guys do some sort of study to see what's possible?
Random number out of there.
No. They never freaking do. It drives me insane.
Random
Okay,
number
so-
generators. And, you know, I mean, for loan officers, I guess there's a silver lining in this, because, you know, again, we're going to try and keep creating programs to help get people into houses, and you don't necessarily have to worry about this. I think you do want to be advocates, you know, for housing policy, but you know, you just take advantage of what's out there, and there's going to be opportunities. But for sellers right now, you know, like PennyMac, and I use this example yesterday. PennyMac and Mason-Mac, you know, two very similar institutions, just a little different scale, right? We both have the same requirements from agencies. So now I sell loans to PennyMac occasionally. If I sell them one of my loans that would help my scorecard, though, I don't get credit for that. PennyMac gets credit for that.
Oh, that's crazy. But
You know,
The
so
whole thing is crazy. The whole
Yeah.
thing is
So-
where they pull this out of their ear. Somebody sits around a table. You know, again, we got a Fed that's mostly lawyers, not economists, and we've got a bunch of people at the GSEs who haven't done loans, or haven't done loans in a long time. And so they come up with these ideas, and
well,
it's like,
yeah, but
what?
see, this is driven by the FHFA. Okay. And so the agencies, you know, ever since conservatorship, and you could argue that there was problems before conservatorship, but you get your marching orders, and it's, you know, you're told jump and you say how high, right? And it's 26%. And then I guess the if there is a positive side, and I'm kind of a positive person, right? You know, then they go to work trying to figure out how to operationalize it. And part of that is beating on lenders in the industry, but others trying to create resources. So Freddie in particular, I've had we have an affordable lending manager. And you know, I have my account exec. We've had the affordable lending manager on 2 of our loan officer calls. We've got them doing materials for us. So, it's not like they're not trying to help as well too. So I will say that.
Well, when we're talking about price per loan and the cost to manufacture a loan in the face of all the technology that we have at our disposal, when we are wondering why the price per loan has gone up so exponentially, maybe the fact that you have to have this kind of manager added to your staff now, like somebody who's managing affordable housing, like what does that do to your P&L, for God's sake? Like I keep asking and nobody's given it to me, Chuck. Maybe you're the guy. I want to see the breakdown of exactly what is included in the price, the cost per loan, right? So we see varying numbers, somewhere between $11,000 and $13,000, depending on, someone's mood, apparently. So we have all the technology in the world, yet we're still underwriting these files. I mean, like from the very beginning, I look at it, the LOA looks at it, then the processor does it. Then you got the front desk person who's like Googling my property to see if it fits their property types. Then it's insane the amount of time and energy we waste throughout the industry. And now we have to have people who are trying to figure out whether we can meet some random 26% number that some person, I'm going to be nice right now, made up in their heads while they're sitting around, probably doing shots at lunch at a meeting.
I think it's during a
here we
golf
are.
game.
What?
I think it's while they're playing golf and they determine what these percentages are based on
Whatever.
cars.
I just think when I'm like saying these things to LOs, the reason I want LOs to understand that this is going on out in the marketplace is because I think that it's hard for a company that has to deal directly with the GSEs, with Fannie Freddie, to have the honest conversations with them about implementing this crap. And if you had a bunch of pissed off LOs, helping to spread the word and I don't know. I feel like we've got to do something to make things
why
better.
Don't we get Sandra Thompson online one of these days?
I've told you I can't have a polite conversation right now with her. I need more therapy.
Yeah, it's just, what's the old saying? You can't fight City Hall.
And Come on, Chuck. Don't give up. We can't give up.
I'm not, we can influence, as housing policy. You've been a big part of the advocacy in our industry, and I think that's important. You can't, and I'm on the CMBA board. We do amazing work in Sacramento. We just suffered a loss for this new emission reporting that mortgage bankers are going to have to do now. And I can't speak to it, but we can get you the information from Susan Milazzo. Okay. Anyway, I can't afford to sit and rant and get into that side of it. I've got to figure out how to operationalize it, how to make this a win for my loan officers and for our referral partners, and how to hopefully spread good ideas to the rest of the industry as part of my service. So I'm taking the high road today.
There you go.
I know you're taking the high road, and that's lovely. But the bottom line is, if we all just roll over and take it all the time, it's a problem, because it's a problem. So we can end on a high note.
Well, here's just the last thing, and I know you got 1 minute. And I think this is probably what bugs you as much as anything, that you'll make one policy that looks this way, but yet you've got LLPAs for people that you want to create, affordability for, that are 3.5 points.
Yeah. They talk out of both sides of their mouth constantly.
And that makes no sense to me. So it's kind of like, and I know there was a big uproar when we did some LLP balancing, and of course, it's everything gets polarized. How, we're subsidizing and this and that, but the bottom line of it is, this is a socialized industry. A good chunk of it is, right? At least the source of the funding is. Fortunately, they got a capitalistic distribution methodology, which is all of us, right? So it's kind of like, it's government's money. If you want to make it the same price for all consumers, I'm totally down with it. I don't care. I think the FHA is a better program, honestly, in some ways. At least it's like, it's mission driven. It's helping people get in houses. And, back to your point, you can qualify. A lot of people, if you don't qualify for an FHA loan, I'm sure there's some deserving borrowers out there that can't qualify for that. But there's some FHA loans that we sign off on that you're like, wow, okay, you're stretching to get these people into these houses. They qualify, but you know what I mean? It's not, it's a good
Yeah.
program. So
Right.
there's my 2 cents on the whole thing.
Well, let's just end with, you know what? Price appreciation is just beautifully. It's not 30%. It's not negative. It's just right. Somewhere between 5 and 9% at the moment, between the 5 indexes that we track pretty regularly, Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow. And so we have a beautiful market right now where if we can get somebody into a property, they are paying less today than they probably will in a year or 2 years. And so there's opportunity out there. It is our chance to make our businesses better and just be committed. So with that, Chuck, thank you so much for joining us today. It was
Thank you for
absolutely a
having me.
pleasure. It was wonderful. So we will see you next week at Tuesday, 11 a.m. Pacific time. That'd be 2 p.m. Eastern time, should you be on the eastern side of the country, and on YouTube at Mortgage Pros 411. So again, thank you, Chuck. Have a great week,
Thank you, guys.
everyone.
Thank you, Chuck.
Take care.
Nice meeting you.